Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Tuesday, December 24th, about 6 a.m. Central Time. Overnight, the precious metals are slightly higher after Monday's disappointing trading session. And I say disappointing because of the fact that we had core durable goods come out, durable goods, consumer confidence, and new home sales all miss across the board. The consumer confidence number came in at 104 versus expectations for 112. And even the durable goods and everything else was significantly lower below expectations. That should have built some more momentum that the Federal Reserve would be much more dovish into 2025. So all eyes still have to be on the Trump administration and how they apply many of these tariffs, and that's been the primary concern about inflation. Now, if you look at February gold, up about $1 at $26.29. Pretty tight trading range in the overnight session, about $9. You look at silver futures down 3 cents. Now, yesterday we saw silver outperforming some of the other metals to the upside here, and a lot of times you'll get these rotation type of plays as a lot of people watch the gold silver ratio sitting at about 87-1. You have March copper up 2 at 411. You have March aluminum up 45 at 25.44. Now the platinum market, which tends to be one of the better performing commodities in December and into January, looks like it may have posted that bottom and we're starting to turn higher, up $8 at 9.57. A lot of people are playing some of the January and February call spreads on the platinum market, so we're going to want to look and see what those are pricing at out this morning. The dollar index is pushing up again at 107.95, and it's kind of turning back to the upside here as a lot of the foreign currencies are a bit weaker. U.S. equities continue to surge on quite a bit of different things here. So we do have the Magnificent Seven really adding to that rise that we saw in the futures indexes here yesterday. And we've got the NASDAQ and the S&P 500 really tacking on some gains here again this morning. Crude oil futures is one to watch here. We are trading the February contract now just a little bit below that $70 range. But I read a lot of reports that were saying that the Trump administration would be very difficult for them to get on this additional 3 million barrels per day that they want to, and it would take quite some time in order for them to achieve that. You do have Bitcoin futures starting to push back up over 1% here this morning at 94,380. So when I look at a lot of these metals here right now, it's been quite disappointing, especially gold, silver, again, copper, platinum as well. They've all kind of broken down here just a bit. So if you look at the gold market, really flat over the last few trading sessions. I believe 2,600 is really your kind of critical level of support. Below that's going to be the 200-day moving average down at 25.34. Back onto the upside, we'd have to get back over the 50-day moving average at 26.97, and then a trend reversal point at 27.32. So market really kind of coiling here in a softer trading. Now, a lot of times we don't see really big moves, especially to the downside. And I'm not saying that it couldn't happen between now and about the first week of January, and especially this final week of trading here, because of the fact that the performance that we've seen on a lot of these products, and it doesn't matter what it is, if it's U.S. equities, if it is the gold market, you'll see traders really come in and hedge a lot of those gains here throughout the year, as they don't want to let those profits here or the performance slip back down. So you'll see a lot of put buying, a lot of hedging, things like that. People might be taking rotations where they're sitting there looking at long gold, short silver, things like that, where they'll do a lot of pairs trades in order to hedge in some of the performance that they've seen here. Long some of the better performing asset classes and short some of the weakers against it. Now you look at that silver contract, needs to get back over the 200-day moving average. And it's interesting that it did break below it and a gap below it, and it's been struggling to get above it. So I think once we do break back above that level, we really want to see some movement over like the 31.13, the 31.50, and then we could start to form that bottom and start to have this V-shaped recovery, or at least an upside down head and shoulders pattern on the chart. So that's something to look for. You have stochastics rising from oversold territory. You have the average true range, which measures, it's one gauge to use, the measure of volatility. And I suggest that if you're looking at stop placement and things like that, I'll have a lot of people that I'll call up and they'll say that, or I'll watch them trade, and what they'll do is they'll put on a contract and they'll just have way too tight of a stop loss. So if they're trading like something like the E-mini S&P, the large gold contract, 5,000 ounces of silver, and they're putting in a very small, very tight stop, well, they'll want to look at the average true range because of the fact that if it's 90 cents, that's a $4,500 move on the large silver contract. That's about a $900 move on the smaller contract. So you're really going to want to widen out those stops when you have higher degrees of volatility. Now, when the average true range starts to come down, a lot of times we see that volatility sink here, and that is traders reassessing where they're going here with their position, and then we see a breakthrough to the upside. You see a surge in volatility as traders need to reprice. Now, platinum is really the chart. It's the best looking chart on the metals right now. It has been in quite a wide consolidation range, so I'm eager to see if it's going to break out and look to threaten to test that $1,000 mark again. You look at January platinum, 955.70, the April platinum at 960 here last. The copper market, copper futures are slightly higher. There was a news story that came out that said base metals were broadly higher as global equities rallied, and Chinese policymakers are planning to boost bond sales. So you saw nickel, zinc, and aluminum all take off to the upside, and basically what's happening is China is doing some bond sales in order to kind of stimulate their economy here a bit. The talk about the gold market and all the headlines out there are really what are interest rates going to do. With this breakdown in economic data that we've seen kind of over the last 48 hours, if we could get some of this inflation to come off a bit, you could see Jerome Powell turn and change his tune here where interest rates start to come down, and that'll be that boost for the gold market. Now, a lot of the analysts out there that I sit there and I watch, in the evening, what I'll do is I have access to a lot of the research here that are put out by all the major financial institutions. And what I'll do is I'll print through and filter through and see, what are the driving factors that they are looking at that are going to impact that market, and have they adjusted their year end or their annual targets as far as prices. A lot of them will put out 3 months, 6 month, 9 and 12. And what I'm seeing here on the gold market is really they believe that there's two main factors that are going to drive it. One, the number of interest rate cuts that we'll expect to see not only in the US but also globally. Will other economies weaken faster than ours? Our economy's been quite resilient, where you get a European economy which is declining at a faster rate, so they need to cut rates more aggressively than the US. That boosts the dollar, and that weighs in on the gold market. So if you're looking at gold, you want to also look at it in different terms, where you could be long the dollar index and long the gold market as a pairs trade. You could be long the gold market, short the euro currency, or one of the other currencies against it. And that what it'll do is it'll soften some of that blow from the rising dollar, and you'll see that gold in terms of other currencies is breaking out to the upside. Gold versus the Australian dollar, the Canadian dollar, the Mexican peso, things like that. So, and they're easy to construct pairs trades using the futures contracts, and they have minis and micros on most of the currencies as well. So that's one thing to watch. The other thing is that they believe that central bank buying, and there was a poll put out by the World Gold Council of a number of different central banks around the globe, and they said that 81% of them are continuing to look to add to their gold reserves. So that would be one of your biggest benefits to that gold market here, especially if China continues to add, Russia continues to add. We start to see other countries as well continue to add those markets. So a couple markets I do believe are going on sale is I believe that Bitcoin down in these low 90s, I think provides some value. You can do the January contract, and I believe that that prices will start to recover. You really want to be positioned here for two different environments when we kick off into the new year. And I believe that U.S. equities, risk assets like Bitcoin will outperform some of the other asset classes like the gold market right out the gate. Then as things start to stall out as far as economic data while inflation remains higher, what'll end up happening is that you'll see a stagflation phase, and you'll have, the gold market will start to take off and perform again. So you just want to look at this and visualize this, how the economy is functioning, and then what does the economy do in the economic data? How does it impact treasury yields, US dollar, and then it has the ripple effect on different things. I suggest coming into this and really coming into 2025 with a go anywhere type strategy. Don't have some underlying bias on things in specific markets like I see all too often here, where people have these just high convictions and they're based on nothing. So that's just a little bit of a thought process on how things go, and then use days like today to really go through, measure and map different markets, print off some charts, print off some research, and bring it with you to wherever you're going, however you celebrate your holidays, and really take some time to look at this stuff independently without any distractions. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.